The nature of a market trend can be pretty well analyzed based upon what all the indexes are doing. As we can see in the Dow, after the shooting star last week, we've been in a steady downtrend. And very simple rule, we're in a downtrend as long as we see a candlestick sell signal and a close below the T-line and it stays below the T-line. Now, the Dow's had a nice steady uptrend for a while. Where's the first logical target that it might be pulling back to? One is the 50-day moving average, and two, if you drew a line through what used to be the resistance level, it may now be coming back to test that resistance level to see if it's going to act as a support level. Is this a major reversal in the markets? Not necessarily. When one index is trading down and the other index, such as the NASDAQ, hasn't been able to come back below the T-line, it's still trading above the T-line and still in an uptrend, that pretty much tells us the nature of the market, that it's sector/stock specific. There are some sectors that are acting strong and there's other sectors that are acting weak. The advantage we have with candlestick analysis is that we can identify very quickly which stocks and sectors are in the uptrend and which stocks and sectors are in a downtrend. This does not create a situation where we're bailing out of the market because we think the market's backing off. It allows us to be progressive instead of reactive in finding those charts that are still acting well. For example, a chart like NXPI that had a nice up day today when the market was sluggish is still the results of a kicker type signal. A kicker signal is when you're in a trend like this and you have a day where it opens here and closes here. Kicker signal opens the next day at or above the previous day's open and goes in the opposite direction. That is usually a very strong indication that the investor sentiment has been kicked in this direction. Notice the same scenario over here where it opened here and closed here and they gapped it up and closed it positive, created some bullish move after that. Another major advantage of candlestick analysis is that it allows you to make your own decisions of what investors think about a situation. Tonight, Solar City was pretty well raked across the coals on the CNBC after the market commentaries. But as you can see, after the morning star signal, right here at the bottom of a trend channel, Solar City did a very strong morning star signal that closed above the T-line, confirmed, came through the 20, and broke out through this downtrending channel. So when everybody else is kind of bad-mouthing the stock, saying it's not a good situation to be in, it's still making some good profits for us on the upside. And recommending stocks that have patterns, such as a nice fry pan bottom, slow curve. Not only do these have the potential of moving up with substantial gains, but even in a sluggish market, they're still going to continue the aspects of that pattern versus worrying about what the nature of the general market is. The advantages that we have with candlestick analysis is that we can see the patterns and signals that have been created through centuries that show what human investor emotion does, and we just take advantage of those reoccurring patterns time after time. That'll be it. We'll see you in the chat rooms.